Good morning, traders. It's Monday, February the 10th. Taking a look at the charts, we got the daily chart of the SP 500, and more or less the market is in a new uptrend. And this phase right here is very similar to a phase like this, or a phase like this, or like this, or like this. So more or less the market has had a consolidation. And now we're in this point here where we're threatening to break out to the upside. We're kind of stuck under these resistance levels, and the market's taking its first kind of pause or pullback. It's had a very strong impulse wave. It's broken this previous high. It broke this previous high. Once you've broken two previous highs, the first pullback or pause is usually seen as a very bullish point, potentially an entry point to get along for a continuation move. And that's where we're at. Now, last week we saw the market pull back, and we saw our short-term momentum cycle get oversold to this lower reversal zone, and the market pulled back to the five-day moving average. Today, we're seeing the equities markets a little bit choppy. They were down 0.5% in overnight trading. If I just zoom in a little bit, you can see we were actually down quite a bit in overnight trading. It has recovered since then. We'll see if this is a kind of a little washout low, and we recover. And if we can hold this blue line, this is the 5-day moving average. When we're in a strong uptrend, we'll hold that level. When we're in a downtrend, we struggle. We're usually underneath it. And at this point, we're holding there. We'll see if we get a strong recovery and a move higher in the equities markets. Now, if we take a look at the safe havens bonds, there's a little uncertainty still in the markets. Bonds are moving up here. They're holding their ground. Overall, if we zoom out to the big picture, we have broken out of this falling trend line, this big bull flag formation where we started to break through it. And this is the first. This was a nice impulse wave. We broke, you could argue, this high. We broke this high. We broke this high. We broke another high over here. So we've had a very strong impulse wave breaking multiple previous pivot highs, which means we've got a lot of momentum. We've cleared that downward bias and all these initial sellers. This is the first pullback. It's starting to bounce and rally, and we could continue to see bonds hold up really well. They could consolidate for a while or continue to move higher. I think there's a growing fear that the equities market's on the verge of a big pullback. So we're seeing money continue to move into bonds, even though the equities market is holding up and moving higher. Bonds, I think, will hold their ground fairly well. I think there's a lot of fear creeping in to the market still. Looking over at gold and silver, gold is up 0.25%, silver is up 0.5%. In the grand scheme of things, very similar pattern with gold and bonds. We had the big breakout and a run higher. I'm not a huge fan of the big down days followed by this what looks to be a bear flag. We could easily see this continue to flush down, come down, test these lows, maybe breach those lows a little bit. If we look over at silver, it's up 0.6%. Again, it's kind of flagging down. Pretty noisy volatility here, a lot of big price swings. Overall, it's still digesting the moves, and we're waiting for it to eventually continue to move higher going forward. Looking at gold miners, they are set to open higher this morning. We had a pretty big down day, previous session there. Overall, it's continuing to kind of be in this consolidation phase, a lot like bonds, where we have this big rally to the upside, and then more or less it started to pull back, and then it started to build this base, and then we've popped out of this base, and now we're consolidating in this kind of range here. Maybe we get an A, B, C correction, something a little bit lower, something to break this. That would cleanse the market and still be very bullish. Overall, it'd be nice if it would stay in this pattern here and eventually resolve to the upside sooner than later. Looking over at natural gas set to gap down about 3.5% this morning. So the UNG position, most likely, unless there's a big recovery before the opening bell, UNG trade, we're back down at these just below the lows we saw last week, and more or less that will trigger the stop. So we'll most likely be out of UNG. That was a small position. It was about 12.5% of our account, and hoping that was going to find a bottom, but it's just the sellers continue to drive prices down, and overall, that play hasn't worked out in our favor. Looking over at crude, down 0.3%, continuing to, it's floundering under this level. Let's just draw a line across these lows here. You can see more or less it has kind of broken below these levels, bounced back up. It's struggling here. Really, it's under resistance. It's trying to hold its ground, but this could continue to unwind even further. Obviously, it's had a big sell-off, a little hiccup another huge sell-off. It's having a little hiccup, and overall it is extremely oversold at this point. And hate to get short on something that's that oversold. It's very similar to this move here. We had a move down, a hiccup, and then a big move down, where we could very easily see the market get into huge volatility, have some big rallies at this point. But it is struggling, and it's trading at and below this level, which is now going to act as resistance, and this is more likely to resolve to the downside. But with big volatility here, I think we could see some pretty strong moves in either direction as the market swings around at this level. Last but not least, taking a look at the US dollar index, we had a big update on Friday. Today, the dollar is trading higher yet again. And surprisingly, metals are up even though we've seen the dollar have this huge rally. And I talked about this in more detail last week, but overall, the dollar is starting to get a little overextended. If we were to just connect these highs, you can see we're getting close. Depending where you go, if you go from an open or a close price, we're getting pretty darn close. Today, the price might actually be tagging this first area of this first falling trend line. This is a pretty strong rebound in the dollar. Typically, when we get a move roughly that size, we get some type of pullback. So overall, if the dollar does start to collapse and start to sell off, again, we're going to get most likely the big spark rally in precious metals and miners. And of course, this has got a potential. This has not happened yet, but we need to be aware that this here could be a very significant, this is a very significant line in the sand. You could argue the market has been rallying up like a saw blade, and now it's shifted direction where the saw blade is turning down, which means we could easily see it continue to do the opposite of what we've been doing. So if this starts to roll into sell off here, it's going to definitely spark a rally in commodities. If we break this level right across here, that will be the start of a very significant downtrend in the dollar, and we could see that really start to sell off, and that would spark the big rally in precious metals. So we're potentially close to a top in the dollar and the start of a precious metals rally here, or new bull market for the miners for a big breakout. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.